Good morning, all. Hope you are able to hear me.
Yeah,
Hello.
Naveen.
Yeah. Before we proceed, any questions from yesterday's or before? So we have started. We saw what do you mean by chart of accounts? Like how many types of chart of accounts? Like what do you mean by an operational chart of accounts, group chart of accounts, country specific chart of accounts, and what is the different methodologies in chart of accounts? 1:n and 1:1 methodology. What is the advantage with 1:1 methodology? Sorry, 1:n methodology over 1:1 methodology. Correct? And we have created a chart of account called HOCA, Adani Operational Chart of Accounts, till yesterday's session, in yesterday's session, if I'm not wrong. Right? Next. So we have already created chart of account. Right? Next, write down. 1 second. Next one. Assign chart of accounts to company codes. Next step, write down. So whatever chart of account we have created, that need to be integrated with the company codes. So write down, assign chart of accounts to company codes. Next step. Write down, assign company code to chart of accounts. Assign company code to chart of accounts. Write down, path SPRO, path SPRO, SAP reference IMG, SAP reference IMG, financial accounting new, general ledger accounting new, general ledger accounting new, master data, master data, GL account, GL account. Next, preparations, preparations, preparations. Next, assign company code to chart of accounts. Assign company code to chart of accounts. Transaction code OB62. Transaction code OB62. Okay. Next, I'll repeat in SAP also. SPRO, SAP reference IMG, SAP reference IMG, SAP reference IMG, financial accounting new, financial accounting new, general ledger accounting new, general ledger accounting new, master data, GL accounts, GL accounts. Next, preparations, preparations. Next, so already we have done edit chart of accounts list. Now assign company code to chart of accounts list. So I'll go with, I'll activate. So you can see the transaction code OB62, OB62. So click on IMG activity button. Click on IMG activity button. Okay. So next, so we need to click on position button. Click on position button. Next item. Click on position button. It will ask for the company code. Okay, company code. What is my company code? What are my company codes here? GI01 and GI02, GU01. So give your first company code, GI01. So when we click on position button, it will ask for company code. So we are going to link the chart of accounts to our company codes. So press enter. So here we have three. You can see here, Adani Cements Private Limited, Hyderabad, Adani Steels Private Limited, Mumbai, Adani Steels, San Francisco, right? So here first we will assign to chart of accounts. If you don't remember this one, press F4. Press F4. Okay. So press F4. So here you can check your chart of accounts. See here. Okay. Right. So HOCA. So here you can see two options. You are doing two columns. One is chart of accounts, one is country specific chart of accounts, right? So country specific chart of accounts will be linked to group chart of accounts. So when we go to 1:1 methodology, then here we will mention the country. Here you can see somebody has mentioned GKR. Then what does it mean? They are following 1:1 methodology. So apart from that, you can see any other thing is not related to country specific. Means what does it mean? They are following 1:N methodology. See here, somebody has mentioned here, whatever, best run Germany. This is nothing but SAP standard one. As I said earlier also, in our training environment, SAP has provided for our guidance, practice purpose. They have created their own company codes in the system. By looking at that, we can learn SAP also. Okay. So here we won't select country specific. When we are going to select country specific, when we select 1:1 methodology. So here again, Adani Steels, HOCA. So again, HOCA. Just write it out. However,
one doubt.
Sorry.
One doubt, sir.
Please go ahead, sir.
Sir, we are assigning the same operational chart of accounts to more than one company code, now.
Yes, that is called 1:10 methodology, correct?
Yes, sir. But in real time also we will follow this, or otherwise?
Yes, yesterday that's the same thing I read. Right? 99% companies follow 1:10 methodology. One chart of accounts to all member company codes. In real time also.
Okay, sir.
That's the reason for our practice, I'm going for this. Later on, I'll take one more example with 1:1 methodology. Okay. Just write it down. So assign your company code to your chart of accounts. HOCA. So for all the three company codes, we have assigned. Okay. Once you are done, let me know. Is it done? So click on save button. It will ask for transport request. So we are in an Adani group. That's it. So GI01 is linked to HOCA chart of account. Operational chart of account of Adani. GI02 is also linked. GU01 also linked. So we are creating one chart of account and we are integrating with three different company codes. So till here, any questions? Any questions?
No questions. No.
Good. So we are done with the second step. Next step, define account group. Third step, and group. Third step, define account groups. This is another important step. Normally, what people will do is in they will create only 4 account groups. One is liabilities, assets, expenses, and incomes. That's it. But we are going to create in-depth of accounting groups so that your end user will not come back to you for all account groups in future. So write down define account group. Third step, define account group. Define account group. Path, write down the path. Path same as above. Path same as above till preparations. Path same as above till preparations. From there, select define account group. Define account group. Transaction code OBD4. Okay, OBD4. OBD4. So click on account group, transaction code OBD4. So here write out, press new entries. So I'll give the complete list. So what is the GL account length we have given in our chart of accounts? What is the length we have given?
Six.
Six, right?
We have given.
Yeah, 6. So normally like we will follow like this, 2 lakhs to 2 lakh, this one. So anything HOC, yeah. Click on new entries, press new entries. Press new entries. Press new
Sir, the
entries.
length also is given by our project lead normally.
Sorry.
Their length will be normally given by our project lead.
Yes,
Okay.
press new entries. Okay. So what is our chart of accounts? HOCA. So here I'll give the complete list. Normally 99% companies will have this particular list. Okay. Instead of having only liabilities, assets. So last week, like last Monday session, whatever we discussed, the total accounts, what is account, what is ledgers and all those stuff. So here what I'll do, I'll create. So as I said that we have a liabilities, we have a assets, we have a incomes, we have a expenses, correct? Yeah, somebody is muted, background noise is coming. Okay. So here we will create. So what are the account groups? We have liabilities, assets. So what I'll do in the liabilities also, as I said that we have a current liabilities, long-term liabilities, fixed liabilities. So all liabilities I'll represent with L. And these are the not standard numbers. Again, I'm telling you. So this is not SAP standard. According to client requirement, according to your project lead, project manager, naming convention, they will give you the complete list at the time of discussion. So according to that, we need to create these groups. Is that clear? It's not standard. So here I'll create it as an L100, means 1 lakh series. So I'll take it as a share capital. Share capital from 1 lakh to 1 2 3 1 lakh to 1 lakh 09999. So all the capital accounts I will take from in this particular range. Clear? Share capital 1 to 1 lakh 99. Next one, HOCA. HOCA. L100, sorry, L11, L1100, L1100, reserves and surplus, reserves and surplus, 1,10,000 to 1 lakh 1,19,999. Next one, HOCA, L120, sorry, H120. Here also it's H, right? In the previous batch, I have taken L, so that's the reason. Okay, accumulated depreciation. One lakh 20 to 1,29,000. All the depreciation I'll take under this number, this series. 1,20,99. Next one.
Naveen, is this amount or they are like some other thing?
Sorry, I didn't get you. Can you please come again?
1 lakh to 1,099. These are like amounts or they are something else?
It's not a number range, right? 6-digit number range means GL account number. So like, see, in your bank
So it will be
account,
account number, not the amount of the,
this is
not the
not
amount of
amount.
share capital,
This is
amount of
not
the
amount.
surplus.
It
No?
is an account
Okay.
number.
Fine, got
Clear?
it. Yeah.
Yeah. Next one. H130. H130. So whenever we are going to create GL accounts, right, we need to take a series from in between this itself. Okay, next one. Secured loans. 1,30,000 to 1,39,000. Next one. HOCA. H140. H140. Unsecured loans. Amounts will be given at transaction level, not at master data level. H150. So earlier we used to select here it as an sundry creditors. Sundry creditors, but now we are not using the term called sundry creditors. We are using the term called trade payables. Trade payables. 1,50,000 to 1,59,000. Next one, HOCA. 1,60,000. H160. Tax payables. $1,60,000. 1,60,99. Okay, next, same HOCA. L170. H170. Current liabilities.
So Naveen, in chart of account, when we are assigning for this sheet, so we need to give all trade, profit and loss account and balance sheet account number ranges here.
All the items
What are,
list we need to give, yes.
yeah, so all the line items. Okay.
Exactly. Whatever GLs normally will occur in the client, then we need to create these account groups.
So we need to see their balance sheet and
Exactly.
prepare this.
Yes,
Okay.
we will take a list of their previous transactions,
Yeah.
previous
second
sheet,
thing,
previous reports. So according to
if you
that, we will design this particular account groups.
Okay. Second thing, if we forget to update any account name group or add in future any account group
That
here.
activity will be given to at once the data will move to production system. Clear? So the end user can also create these account groups. Normally we won't see For example, we are doing implementation right now. Probably they have entered into separate business and they have they came into some scenarios like a new account groups. So at that particular point of time, what we will do is, if we are taken as an AMC, annual maintenance, then they will come up with, they will raise a ticket that we need to be create these account groups. So as a consultant, there is a support team will be there. So we will create account groups over there. If we don't have any, normally end user will have, the support team will be there always,
Okay.
or they will maintain their own IT division also. Okay.
Okay.
Yeah. Next one. Provisions. So liabilities list, this much is the liability list I have. 1,89,000, for example. My client is deals with these many liabilities. And next one, I'll go with the asset series. HOCA. So I'll take two series for assets. So 200, A200. Okay, fixed assets. 2 lakhs to 2,99,000. Next one. HOCA. A210. A210. Investments. Two lakhs 10,000. 2,99,99. Next one. HOCA. A220. Loans and advances. $220.
Naveen, here in account group, we are
Mhm.
only giving based on the recognition of the name, right? Like, for example, in liabilities, you have given H140, H150, and
Mhm.
when it comes to fixed assets, it's starting with A2.
Sorry. This is nothing but your L actually. It should be L. I'm very sorry. Hope you got my point. L indicates, see here, A
Yes.
indicates assets. Here it should be L, not H.
Right. So just to understand, like, that group range is related to liabilities or something like that, right?
Sorry.
That group range, what you have given there, that
Mhm.
indicates the description of the name.
Correct.
For example, that certain group is related to liabilities and certain group is related to assets.
Some certain group is related to incomes, certain group is related to expenses.
Okay. Okay.
Is that clear?
Yeah, I got it.
Only for our understanding we are taking, actually, I'm very sorry. I'm supposed to take it as in, let me check. Thanks for reminding.
Okay.
New entries I'll take. I don't think we have HOCA. I am supposed to select again first. So it is easy for us to remember. Share capital account. 1 lakh to 109999. HOCA. L110. Reserves and surplus. L120. Accumulated depreciation. Next one, 130. L130. Secured loans, we have taken the same, right? Secured loans. Secured loans, 130. 130, 9999. Next one, HOCA. L140. Unsecured loans. One lakh 40 to 1,40,99. Next one, HOCA. 1,50,000. L150. L150. Trade payables. Trade payables, 1,50,000 to 1,50,99. Next one, HOCA. L160. Tax payables. 1,60,9999. Next one, HOCA. L170. L170 current liabilities. $1,70,000 to 170. Next one, last but not least, provisions. L180. $1,80,000. 1,80,99. Okay, next one, we'll start with the assets. HOCA, asset 200. Asset 200, fixed assets. Two lakhs. 2,10,000. 2,01,000, or what we will take, I'll take here. HOCA. A210. Investments. Next one, HOCA. A220. Loans and advances. Advances. 220. 222. 9999. Next one, HOCA. A230, asset 230. Investments, already done, we have done with the investments, right? I'll take it as an inventories then. Already we have done with investments, so I'll take inventories. Inventories. $230. $23,9999. So next here I am taking HOCA A240. Okay, this is cash in bank. So this is important. Cash in banks. 2,40,000. 2,40,99. So all the cash account details and all the bank account details, accounts, GL accounts, we will create in between this range only. 2,40,000 to 2,49,99. Nine means all the house banks, cash outgoing bank accounts, incoming bank accounts, and everything we will create under this particular head only. Next one, HOCA A250. Trade receivables. Two lakhs 50. 2,50,99. Next one, same HOCA A260. Tax receivables. $260. This is the manual thing which we need to do in real time also.
Naveen, I have a question on loans and advances.
Yeah, we will discuss each and every point.
Okay, okay.
What is the difference between secured loan and unsecured loans, loans and advances? Yes, yeah, you just go ahead or else. Meanwhile,
No, you can continue. Just finish the chart of accounts, then
Yeah.
we can discuss.
tax receivables, next one, 270. Current assets. Like 70. Next one. Next one. A280. Miscellaneous expenses written off. I'll take here. Miscellaneous expenses written off. Two lakhs 80 to 2 lakhs. So till here we are done with the assets and liabilities, balance sheet items. Next, I'll go with other items like profit and loss account items, HOCA. I'll take incomes as an I 300 series. Okay, sales and revenues. Three lakhs. Two 30,999. HOCA I 310. I 310. Sales deductions. 3 lakhs 10. 319999. Just write it down till here if someone has missed. Once you're done, let me know, please.
Yeah.
If you're done, let me know.
I'm done now.
Okay.
2 minutes, Naveen, please.
Yeah, no problem. Take your time.
I mean, the trade receivables comes under current assets, right?
Trade
So
receivables
while
comes under, yes.
so we have to like we also have a separate current assets as well.
Yeah. So
Current asset,
what we are
current
going to
asset.
do is at the time of ledger creations, we are going to map this current asset with the trade payables. Sorry, trade receivables.
Okay.
Yeah.
You mean to
So
say
to
like
view in our, sorry.
Go ahead.
So to map, to see in our
Yeah.
financial reports, what we are going to do, trade receivables, we are going to again further map into current assets. We'll integrate them.
Mm.
But here I would like to create all my vendors, right? So if I take under current asset trade receivables, again, there would be a problem. If I create my all sundry debtors or whatever debtors, then it would be challenge when if I initial at this particular point of time, when I go to a what we call AR module, if I create customers, then all will show under not under trade receivables, they will show under current assets. So first
Okay.
head group would be trade receivables. Under that, it will move to current assets. Hope you got. See in trial
Yeah,
balance, how it will show. In trial balance, it will show all the list of accounts like sundry debtors separately, sundry creditors separately. Right? And all other current assets will come under separately because, but at the end, when we do our balance sheet, this all trade receivables will come under current assets and all trade payables will come under current liabilities. Is that clear? So I'll show you that how to map that.
And even that miscellaneous expenses, that one
Return
is
of that is.
yeah, that comes under assets.
Yes, of course. Why? Because what do you mean by miscellaneous expenses? You have spent some expenses, small expenses, clear, but you have not taken services from them. So what it will be, what it will happen, they have to return back to us. So something which we need to get it back, then that will become an asset, right? That is the reason I mentioned written off.
Okay. Yeah.
Any other?
So do we have to remember all these name of the accounts groups, or is it as I said, as you were mentioning that this will be given by a project lead?
Yes,
But do we still
it's
have to
not
remember
required.
normal-
You will get this particular list from your project lead. Naming conventions and all, this account group numbers and all, they will give you.
Perfect, thanks.
But data entry part we need to do here. But it's advisable, always remember, because don't depend upon your, means probably you may get your project lead role. Then we need to define them. We need to give to our consultants. Right? In your project, probably they are taking small project. They want only the configuration between some base to till AR module. GL and AP and AR module we need to implement. Then probably you are a senior person. They ask you to give the naming convention. So at least for that particular purpose, we need to have a knowledge. Hope you got my point.
Yeah, so but for naming convention is good enough, but the account groups will be still given by,
That's what I'm saying. See, if
from-
your project is very big, so normally this will come from your client to project manager to consultant. Fine.
Correct.
Yeah. But in case you don't have any project manager as of now, and you are going to lead it because of your expertise. So at that particular point of, you need to take a call on this. Is that fair enough?
Yeah, clear now.
Yeah.
And Naveen, regarding the same miscellaneous expenses, we can call it as prepaid also, right? Prepaid expense also, right?
Yes, you can call that prepaid expenses also. Written off it does means that the same thing. When we will get a written, It's nothing but whenever we prepaid it or something we can't receive our service. Yeah, last session I have explained, right? Accrued and unaccrued expenses.
Yes.
The
yes.
same thing here. So
So
somebody
Naveen,
asked loans and advances. I don't understood what that question is.
Yeah, loans and advances, as raised by Shaker, it will come to liabilities, right? Sir?
No.
Loans and advances.
No. Secured and unsecured loans will come under loans and advances in the sense, as a business, we have given loans to someone. We have advanced to
Okay.
someone.
Yeah.
Hope you got my
We
point.
have not received, we have given to
We
someone.
have given to someone.
Yeah, in that case, assets.
Correct. Secured loans and unsecured loans. What is the difference between secured and unsecured loans?
Like bank guarantees and all.
See, as per
Secured
in
loans are
general,
basically it's
yeah,
like give there are some kind of a security given for them, and
mortgage,
unsecured are like based on
mortgage.
goodwill and
like dividends.
Yeah, some
Collateral
mortgage
is there
loans
as
are
well.
considered as unsecured loans. If you're not keeping any mortgage or something, gold, building, land, whatever papers, so then that is comes under unsecured loans in real time. Again, I'm telling you. But as per accounting terminology, secured loans, and if you check in Google also, secured loans means they will give you a term called whatever thing you keep it as in security and you're taking a loan, then that comes under a secured loans. That is nothing but mortgage, all mortgage loans. And unmortgaged loans means you're not keeping any security and you're taking a loan, right? Then that is considered as an unsecured loans. But in real time, in the initial stance, as per accounting, base accounting concept, the lending concept was into two different types: organized lending concept, unorganized lending concept. Organized lending concept in the sense nothing but if you are taking loan from your any organized banks, right, then that is considered as a secured loans. And if you are taking a loan from unorganized sector, that is nothing but from your money lenders or creditors, friends, relatives, clear, then that is considered as an unorganized or whatever called unsecured loans. Clear? Now we are considering secured and unsecured, mortgage and non-mortgage. But actual point where it derived from secured and unsecured loans in the sense, if you are taking any loans from recognized banks, then that is considered as a secured. Clear? The terms and conditions will not change as per your agreement. But when it comes to unsecured loans, that is nothing but unorganized sector. That is apart from banks, you are taking from any money lenders, any creditors, private creditors, right? Relatives, friends, then that will come under unsecured loans. Is that clear? But right now you can remember, as per our business point of view, secured loans are nothing but whereby keeping a mortgage. Something, if you are taking a loan, then that is nothing but secured loans. Unsecured, non-mortgage, personal loans, your personal loans. Any questions?
Naveen, when banks give a company loan based on the goodwill, so what is that? Secured or unsecured?
That is also secured loan. If you don't have, say, credit, they will check the credibility of your company, right? So that itself is a mortgage. Clear?
But that is like there's no guarantee for that, right? Because goodwill is kind of it's not actually a thing which is they can use for the guarantee, right?
That's what we are. See, as a goodwill means whatever. See, what bank required? Bank required your previous 10-year statements, right? Your profit and loss account statement, whatever financial statements are there, that you need to provide. Goodwill in the sense people want to go with your whatever brand or whatever you're talking. So goodwill in the sense what they will take your 10 years of reports or past 5 years of reports. Then only they will give the loan. So what is the security you are giving to them? Your 10 years report, you are giving security to them. Hope you got my point. So it is a guarantee. See, even your mortgage, if you are doing a mortgage loan, for example, you have kept gold in the bank and you took 10 lakhs of this. You kept a building for a loan and you took 1 crore a loan. Probably due to some problem, your building value might get decreased. due to some reasons. Then how it would be a secured? It always fluctuation, but according to what is secured in general, that is the reason I never take secured loan in the sense mortgage loan or unmortgaged. I'll say that if you are taking any loan from recognized sector, then that is considered as a secured loans. Unsecured loan, unrecognized sector, right? Then that is considered as an unsecured loans. Got my point? Yes, no.
Yeah, got
Yeah.
Got it.
What is the difference between reserves and provisions? Here I'm having a reserve, here I'm having a provision. What is that? Why these are liabilities? We will discuss in next session. Okay. Because it's a huge topic again, because again, it is related to your accounting. People they will use the same term, reserves and provisions, right? I'm asking a simple question. What is the difference between a reserve and a provision? Provision for bad debts, reserve for bad debts. Did you ever heard about it?
Yes, yes, sir.
Yeah. Provisions we had.
Yeah. So is it done? Is it finished?
Yes,
Yeah,
yes,
finished. Yeah.
So we can go ahead. Okay, so I'll create it as an HOCA I320 other incomes. Sorry, other incomes 3,20,000 to 3,20,99. Okay, other incomes, next one. HOCA I330. Increase and decrease in stock. So here decrease in the sense, don't go with the decrease. Increase in that means nothing but a value has been increased. The stock value has been increased. But I'm taking a common group here. 3,39,99. Okay, this is about my incomes. So next I'll create my expenses. So expenses, I'm giving letter E. So to recognize E400, E400, raw material consumption, 4 lakhs to 4,99,000. HOCA E410, E410, personal expenses 410, 419999. HOCA E420, manufacture personal expenses done, right? So manufacturing expenses HOCA E430, administrative expenses HOCA E440, E440, financial expenses $44.49. Next one, HOCA E450, I'll take it as in selling and distribution expenses. E460. Other indirect expenses. Okay. So that's it. Upcovered account group. We have created expenses accounts, incomes accounts, asset accounts, asset account groups, and liability account groups, not accounts. Account groups we have created. Just write it down. Once you're done, let me know, please. Is it done?
Naveen, 2 minutes, please.
Yeah, no problem. Take your time.
Yes, it is done, Naveen.
Hope everyone is completed. Okay, so these are the account groups. Next step, the most important step, retained earnings account. Retained earnings account. So write down, define retained earnings. Define retained earnings account.
Naveen, can we save this now or?
Yeah, we can save it. Sorry, we need to save it. So click on save button, save it. If you won't save, then again we need to create it. Okay. So write down retained earnings. What do you mean by retained earnings in the sense? This is the account. Retained earnings in the sense the left out balance in your profit and loss account. Clear? For example, in your P&L account, you will take. So one question I used to ask the people, when we prepare our profit and loss account, what we will get? What is the output?
Profit or loss?
Profit?
Profit or loss.
Sorry, I'm not able to hear you.
First, people to understand.
See, when we prepare our profit and loss account statement, what is the output we are going to get? The end result?
Get profit or loss?
Profit or loss. Profit or loss we are going to get. Correct? Then why we are calling that statement as a profit and a loss account? Why can't we call it as a profit or loss account? Because we won't get both at a time, right? Either net profit we will get or net loss we will get. Then why we are calling it as a profit and a loss account? Why we are not calling it as a profit or loss account? Got my question? Yes, no.
Yes, we got your question, but
Yeah, we got your question.
Sorry?
Maybe we are recording both, so that is the reason
Exactly,
we
because
are.
see, whatever incomes and expenses, throughout the year, whatever incomes we will get, whatever expenses we will get. So, okay, in this particular sheet, why we are calling it as a profit and a loss account in a sense, all the nominal account items, you remember day before yesterday, I told you one thumb rule. What is that? How many types of accounts we have totally? There may be lakhs of accounts, but either that will categorized under what are the accounts?
Two type of accounts, permanent account and temporary accounts.
Not permanent, personal and impersonal.
Right.
Again, under impersonal, what are the accounts we have? Real account and nominal accounts, correct?
Right.
Personal and real accounts are supposed to be balanced. Nominal accounts, what are the things will come under nominal accounts? All expenses, losses, incomes, and profits, correct? And they are supposed to be totaled. You remember thumb rule I told, the ledger thumb rule. All personal and real accounts are supposed to be balanced, and all the nominal accounts are supposed to be totaled. Once they are totaled, then that will be transferred to posted to profit and loss account. If it is expense and loss, then that will be shown on the debit side. If it is incomes and profits, then that will be shown on the P&L account credit side. So the sheet contains throughout year expenses and losses one side, and throughout year incomes and profits contains one side. So that is the reason we will call that statement as a profit and loss account, because the sheet contains throughout the year expenses and losses, throughout the year incomes and profit, not net profit, net losses, general expenses and general losses, general incomes, general profits it will contain. So when you compare both the sides, if you are the debit side, you will take all expenses, and credit side we will take all incomes and profits. So if your incomes and profits are excess than your debit side of expenses and losses, then that balance we call it as a net profit. Then that balance is considered as a net profit. If your expenses and losses are exceeded, then your credit side of P&L account statement, that is nothing but if it is more than your incomes and profits, then that is considered as a losses, net losses, net loss. Clear? So here in SAP, we have a term called retained earnings. Retained earnings account. This is very important concept here. So what do you mean by retained earnings? For example, if a business got in this particular year 10 lakhs of profits, 10 lakhs of profit. Okay. So out of the, what is the main job when the business got the profit? It has to distribute the profits to its partners, shareholders, or whatever it is there. They need to distribute it. Clear? So they won't distribute, any business won't distribute 100% profit. Some part of the amount they will keep it aside. The business will keep it aside for future expenses or future expenses or future expansions. Clear? So they want to distribute the complete amount. So out of 10 lakhs, they have distributed 6 lakhs to their debenture holders, shareholders, and all, and they kept 4 lakhs with the business. Clear? They kept 4 lakhs with the business. Okay, don't go with the numbering. 4 lakhs with the business itself. Why? For future expenses, future expansions, right? Or future any loss occurs, then they can set off from this particular amount. So this is considered as an undistributed profits. Distributed profit, undistributed profits. And how much is the distributed profit? 6 lakhs. 6 lakhs is the distributed profit and 4 lakhs is the undistributed profit. So whatever undistributed profits are there in SAP terminology, we call it as a retained earnings. Retained earnings. What do you mean by retained earnings? The earnings are retained by the business. They're not going to distribute. Why? As I mentioned, for future expansions, right? For future advertisement, of the business for future development. So instead of asking again from the shareholders and all, whatever retained earnings are there, from that it's going to be spent. If it's not going to spend in future, so what they have to do with this 4 lakhs? They have not spent a single amount from this 4 lakhs for coming 1 year. Then what they have to do?
They will go for the dividends.
They need to repay back to owners again. Is it the business
They will-
amount or owner's amount? This 4 lakhs. Whose profit is this?
Owners.
Shareholders.
So what business has to do? Business has to repay back to the owner, correct? Owners or shareholders or whoever it called. So now, can you please tell me, is it an asset or a liability to the business?
Liability.
Liability.
Because something which we need to repay back to someone, then that is considered as a liability. So that is the reason retained earnings, the term SAP terminology, this is retained earnings. In general, we will call it as an undistributed profit. All undistributed profits are nothing but liabilities. So retained earnings are also considered as an liabilities. So we need to keep one account reserve for this retained earnings. If I am not keeping this retained earnings, what is the difference? Your balance sheet will not be agreed. If I'm not taking retained earnings from P&L account, then your balance sheet will not agreed. Means your liabilities will not equal to your assets, or your assets will not be equal to your liabilities. Again, we will discuss one complete session why your liabilities will equals to your assets. Always why your assets will be equal to your liabilities. Okay. In the same way, we'll discuss what is the difference between provisions and reserves. What do you mean by bad debts, good debts, doubtful debts? That particular topic we will take in one session. Okay. So writer, define retained earnings. So we are going at the time of configuration, initial configuration only, we are going to reserve one particular GL account for retained earnings account. So path, same as above, write down path, same as above, path, same as above, till preparations, and from there select define retained earnings account. Define retained earnings account. Okay, and define a retained earnings account. From there select define retained earnings account, transaction code OB53. This is again an important transaction code, OB53. So now I have started the business, right? Do I know how much profit I'm going to get or how much loss I'm going to get? Are we going to know how much profit we are going to get?
No.
Right? So here what we are going to do is, so something which we don't know, we call it as a suspense. So X is the profit, X is the loss. So normally what is the term we are going to take here is, so again, I'm coming here. So give me 2 minutes and we will complete the session. So here, define retained earnings account OB53. So click here, define retained earnings account, give your chart of accounts. What is our chart of accounts? HOCA, right? Press enter. So here we don't know what is our profit or what is our loss. So normally we use the term letter called X. So any letter you can take, clear? But normally majority companies will take it as an X. So X is this is the profit, X, this is the loss, like that. Any term, any letter you can take. And we are reserves and surplus. We have taken from 1,10,000 to 1,19,999. So reserves and surplus, retained earnings comes under reserves, right? So here we are keeping the number called, we are reserving the number 1,10,000. You remember reserves and surplus we have given 1,10,000 to 1,19,999 for reserve. Retained earnings are nothing but a reserves. Why we are keeping reserves? We don't know what kind of expenses or what kind of accidental losses we are going to get in future. So with this particular reserves, we are going to use that amount, right? So that's the reason I'm using the first number, 1,10,000. That is nothing but reserves and surplus, first number, 1,10,000. Clear? Any question here? Any question?
Understood, Naveen.
So click on save button. It will show an error message. It will show an error message. So here you can just write it down. Account 1,10,000 not created in chart of accounts HOCA. So we have not created, we have given the account to group, but did we created any GL accounts as of now? Did we created any GL accounts?
No, we have not.
So that's the reason we are already designing the GL account number here. Means what we are doing at the time of GL account, before that only we are reserving this particular account number for only for retained earnings account. So at the time of GL creation, we are going to use this number for retained earnings account. Is that clear? So that is the reason it is showing account number 1,10,000 not created in the GL. GL creation is not done in chart of accounts HOCA. Just we have created a groups 1,10,000 to 1,19,999, but we have not created any GL account. So that is the reason it is showing the warning message. So it is a yellow message. As I said, we will get 3 different messages. One is red, one is yellow, one is green. Red in the sense it's an error message. It will not allow you to move forward. Once it comes to, it's a soft warning message. Error message, warning message, information message. Information message will in green color. Okay, now just press enter. Write down this one, because people have posted number of times. So when we are creating this retained earnings account, we are getting this particular error. And instead of going save button, they will press back button. Okay, write down, ignore warning message. That's it. Okay. Okay. So done. Any questions here? So total 4 steps. One is we have defined a chart of accounts. Next one, what we have done, next step, we have assigned chart of accounts to company code. Next one, what account groups we have created. Last but not least, fourth step, we have created retained earnings account. Clear? Any questions here? So these are the 4 steps we have. Right? Tomorrow we will see the most important fiscal year variant. So the number of fiscal year. So here after every step is important. So I don't want to say this is important, this is important. Every step is very, very important. So again, I'm reiterating practice is most important here. So give the time for your practice. Fine. Any questions?
No, Naveen.
Okay.
No,
Thanks.
Naveen, all okay.
Thanks. We will see in tomorrow's session.
Thank you, Naveen. Thank you, everyone.
Bye.
Thank you, Naveen.